data and numbers are very important. Analytics is very important, but they need to have that creative side. And I feel like the creative side's been kind of dying these days. The innovation in marketing is not there. On the sales side, it is give me the tools, give me. I mean, you've done sales before, you've seen mortgage, and I can tell you, I mean, I was managing thousands of people when I was doing First National, and even at AmeriQuest, watching what everybody else was doing and seeing the gaps there, is that salespeople they're always this lazy, and it's not they're lazy, it's just that it's ingrained in their mentality. I need leads, I need this, I need that. Well, if you go back to the CEO, did the CEO hire a salesperson first? Chicken and egg, or did they hire a marketing person first? They always hired a salesperson first, which that's another advice. That's a mistake. Your salesperson wants leads, they want marketing, which means your marketing person needs to create content, have it planned out, and not be behind the salesperson, be ahead of them. Have the CRM in place, have the automation for the follow-up.
Well, hello. Today on the Intentional Leadership Podcast, we have Christopher Hussain. He's the founder of RealKey, an AI mortgage tech platform. He has over 900 brokerages using it and credit unions, lenders. He was and is, I guess, currently one of only a handful of people licensed in all 50 states, funded over $2 billion in home loans. He has been in the trenches. He is crazy to be in the mortgage world. He came into it about the time that everybody else was getting out, including myself. So I would love to hear how that whole tech and the innovation and execution kind of merges with that dinosaur of finance and how he's been able to navigate that. Welcome, Christopher.
Well, glad to be on. Appreciate you having me here.
Yeah. So tell us what made you, and decide finance was what you wanted to do, or banking, mortgage banking specifically.
Yeah, I kind of fell into it, while I was in college. I was going to UC Davis, and obviously needed a job, wanted to go through and get some additional capital in and help out the family that, got me to where I was. And basically just fell into mortgage, doing crossing underwriting for some of the big banks, and went to a career fair of all things with my now wife's friend had invited me, and she was going there for what she thought was her final interview, and ended up being when I got hired. Oops. Cocky, college student thinking that I should be a manager. Went around to all the companies at the career fair, basically saying, hey, what kind of managerial roles do you have? They all laughed at me, said, hey, you don't have any experience. And needless to say, when I had the, managerial chops was definitely there, but when I had experience, that was for sure I did not.
Right.
And, ended up coming to what was AmeriQuest, which was unfortunately one of the big parts of the housing crisis. They were a subprime lender. And he's like, how'd you like the fair? I'm like, I didn't like it. Everybody just kind of laughed at me. And he basically said, hey, I like your attitude. Here's all the resumes I was looking at. I'm going to put an X on yours. I'm throwing these literally in the garbage. And you're going to get a call on Monday, and that's going to be your new boss. You can pretend like you didn't know you got the role, but you had the role. That was the start of it, and just kind of kept going and going at it. It went from being, at AmeriQuest. Fortunately, I got out before things really went topsy-turvy. Some people thought I was the whistleblower. I was not, and that's because I was the top person at a 5,000 person company there. And then started my own brokerage, which is the first ever paperless brokerage, which led to me being national sales director for the largest franchise broker in the U.S., First National Mortgage Sources. And then from there, at a 100-person branch, and housing crisis hit, sold all my stuff to a repo company, became basically their head of product and interim CTO. Left them after I helped them to build some new tech, which was basically putting cameras on tow trucks they contracted with to recognize license plates, which eliminate all collections, skip tracing, all that fun stuff. And got back into mortgage, did it solo rather than having a 100-person branch and being a national sales director. Went out and got a license in all 50 states, which I don't have right now. I did have, and I'm still to date the only person I know that's ever had all 50 states, but originated, processed, and funded in all 50. And then within a few years, I was the #1 person in the U.S. 2 years straight. Took some time off, did consulting and advising, and then started Syndio, which was online mortgage brokerage, similar to Better.com. raised about 50 to 60 million dollars, and then got acquired by Freedom Financial in 2017 and started RealKey.
Wow.
So
A
that's the whole.
journey of entrepreneurship. Did you have your first job when mowing lawns, or what did you do when you were a kid?
Oh man, when I was a kid, yeah. I mean, I was already an entrepreneur at heart.
Okay.
I would go over to Pace, which was kind of like the Costco of the time, and have my parents buy the big boxes of candies and take those to school. And obviously, the kids' parents wouldn't give them candy, but they all had cash, and so I had the
Good.
rich kids going through and buying the candy from me, and I had a little extra bucks, would sell pogs and trading cards and whatever I could get my hands on that I knew was the hottest thing. I just sell to them. And yeah, that
Yeah.
was how I got started.
And that's what I find is everybody that's an entrepreneur kind of started doing something when they're younger. Whether it was a paper route or selling candy and pogs and cards or whatever it is. And yeah, so that's interesting. So you get into the mortgage industry, it's a dinosaur, and you're forward thinking and a tech guy. I was at Ameritrust too. I was actually at WAMU and Wells Fargo as well, so I know the crash.
Yeah, the
All
implosion, and there was an implodometer about all the company, all the banks that were shutting down, and oh my God.
Yeah, it was a disaster. So what kept your head up? What was how were you optimistic through all of that and the battles that were going on?
I mean, I just didn't know how to quit. And that's really what it comes down to is grit, and that's what's important, entrepreneurialism. And for me, I was really good at it. I liken it to when I was doing swimming and water polo when I was in high school and even prior to that. My parents got me into it, and I hated it. And
Hmm.
I was just really good at it. And so it was going to go through and potentially get me scholarships. And I ended up deciding, once I saw what happened to my sister and how her grades went down, focusing too much on swimming, uh, I decided once I got to college not to do that. Now with mortgage, I'm good at it, and it was paying the bills. So, uh,
Yeah.
even during the housing crisis, I just didn't quit, whereas everybody else did, and I saw an opportunity there. So look, less people that are out there. It's a consolidation. Uh, how can I differentiate? And I just looked at everybody and looked at the systems, and that's where you find the opportunities. And for me, I'm fortunate to have that tech background where I can bridge that gap between industry expertise and what hasn't been built, what needs to be built, and then how to actually build it. Because end of the day, you can have some great engineers, but if you can't communicate to them what you want, they're going to build as interpreted versus as intended, which that's why you also don't work overseas, is if they're building at night, you wake up in the morning, oh my God, that wasn't what I wanted you guys to build. Oh, well, that's what the notes show. If you
Yeah.
don't have the right notes, you don't have that proper communication, consistent communication. Again, built as interpreted versus as intended.
So were you a coder or you're just the idea guy and you find the engineers to make it happen?
I'm a head of product, but at the end of the day, that's where you can communicate the business side of things. And when you find most heads of product, or as they call them today,
Hmm.
product managers tend to have MBAs, and that's because you really need to be able to do that product market fit, business analysis, talk to the marketing, sales. So you're basically talking to everybody these days. Head of product and product managers are actually running companies. It's not the CEOs. They're actually doing everything the CEO is doing on the fundraising.
Right. Yeah. So you will stick on mortgage, and then we'll kind of go on to what you're up to next. So you're lending in all 50 states. You've done 2 billion across the U.S. and you say, I'm going to go and do this better. And you're in San Francisco. You reach out to friends and family. What does it look like when you start up the next company, and how's that going?
I wish I had some rich friends and family. That was not how I started. And I think that's the case. I mean, some people do get a little bit of money to start up. I fortunately had a good savings, so I utilized the savings to go through to do that. And then from there, obviously, savings is not enough. You really do need additional, deeper pockets, and that's where I ended up going through and bumping into an incubator, the Batchery, where I'm now mentoring for.
Well, that's
And
great.
Yeah, no, it's wonderful. I love the people over there. And, for me, I had the option. I did get into Y Combinator, into Techstars, into 500 Startups. I applied to all three, got into all three. And I just hated their terms. It's like, oh my God, they give you this much for this valuation? Like, screw that. No, I don't like these terms. Well, that's our terms. Okay. And, I understood the value that they brought. And instead, I ran into these guys at the back. They're like, yeah, we don't charge anything at the time. They didn't charge. They said, "Look, you come in, you join us. We'll charge you a desk fee because we want you to be here in person,
Mm-hmm.
Berkeley, and we have what we call, investor advisors, and you're going to partner with them, and they're going to help you with your deal room, make sure that your deck's there." Fortunately, I already had all that stuff, so I was well ahead of the game. They didn't really add that much at the time for me. I think the rest of the companies going through it, obviously not quite as advanced or had not had experience going through and doing a startup before. And eventually, that's what happens is one of the investor advisors just says, "Hey, I want to invest. I'm going to set your terms." And I had him and some other individuals go through and give me valuations. I chose the one that had the highest valuation, and the rest is history. At that point, they introduced their other angels that they're friends in their network, and then they introduce you to the angel groups, and then from there you have had proper diligence enough times that you start going through and you get in with the VCs, and your deal room looks not like amateur.
Mm-hmm. Right. So, well, a lot different at that point.
I mean,
You're
it's so off at eight. Again, like I said, I'm mentoring advising now. I think startups, that's the whole thing is that they get their deck going. They're so excited. I got my deck. I got my deck. I got my idea. They don't realize, like, great, I can make 1,000 intros for you, and you could do well during those meetings. Once they get into your deal room and it looks like amateur hour, they're going to run for the hills. I want to know what money is going where. Like, let me see your financial modeling. What are your projections? And do you have all of your legal buttoned up and your contracts and da 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 da. It's all there. If it's not, then I might be a little concerned about giving you a bunch of money and knowing that you are going to first spend months trying to put this all together.
so would you recommend somebody coming to the table with all of that in place? I mean, how do they know? How do they find that mentor then? If you think all these entrepreneurs and ideas, they come together and they're like, oh, I got this new what app, and then oh, I got a deck, like you said, and then you're stuck. There's nobody operational, in there telling them what to do.
Well, I mean, that's the whole thing is that, especially here in Silicon Valley, there's a lot of builders. I mean, hell, the UC Davis, I'm mentoring there as well for their Entrepreneurial Academy, and that is almost 100% engineering talent. It's great ideas,
Mm,
great talent. I actually built some of their products, but at the end of the day, they need that business person because they should be building. If you're the builder, you should not be fundraising. You should not be doing the financial model. You should not be doing the legal, the HR, the payroll, etc., all the contract negotiations. You need to be building. And I think that's something where people just need to realize that there is a lot more that's needed. And as long as they understand that, they're going to be better for it. And at that point, yes, finding a mentor advisor or joining Incubator Accelerator. I'd say even with the Incubators Accelerators, I kind of told you at the same time, certain ones, their advisors and mentors are so far removed from being in the trenches, I find that there is a disconnect there.
mm-hmm.
Or they're very specialized. They had a lot of success at Oracle or some large company like HP. But what did they do there? They were director of a small division. They did not start the companies that they joined from scratch with scraps. And if they did start a company, they come from a rich family, again, privileged background, went to MIT, Berkeley, Stanford, Harvard. Again, fundraising a lot easier for them. I call it the sexiest girl in the room. That sexiest girl in the room, if they check off about 7 different boxes, you may not check off those. And that means that with the same company, you're going to have a harder time fundraising than that person did.
Right.
So that's the whole thing is I think it's the being disconnected, the privilege side. Also, you need somebody who is cross-functional, can talk to, I mean, a founder at the end of the day, a CEO, not only is fundraising, but they are talking to sales. They are talking to marketing. In most cases, they're the only salesperson, or they're supposedly the best salesperson of their company, or the best marketer of their company. But then you still need to talk to engineering, product design. I can tell you most of the startups I talk to, they're not asking for help on product or engineering. almost everybody wants help fundraising, sales, or marketing.
Hmm.
Why do you think?
Everybody wants help fundraising, sales, and marketing. So
Why do you
anybody
think?
out there listening goes, hey, that's where I should go focus my time on.
Well, and that's the whole thing is everybody wants a hunter-gatherer. I can tell you, I don't think that there are, being honest, I don't think there are many good actual salespeople out there or good marketing people. I think that you can find a dime a dozen marketer, head of marketing that strictly just look at numbers and data. Now, data and numbers are very important, and analytics very important, but they need to have that creative side. And I feel like the creative side's been kind of dying these days. The
Hmm.
innovation in marketing is not there. On the sales side, it is give me the tools, give me, give me, give me. I mean, you've done sales before, you've seen mortgage, and I can tell you, I mean, I was managing thousands of people when I was doing First National, and even at AmeriQuest, watching what everybody else was doing and seeing the gaps there. Is that as salespeople are they're always pinned as lazy, and it's not that they're lazy. It's just that it's ingrained in their mentality. I need leads. I need this. I need that. Well, if you go back to the CEO, did the CEO hire the salesperson first, chicken and egg, or did they hire a marketing person first? They always hired a salesperson first, which that's another advice. That's a mistake. Your salesperson wants leads, they want marketing, which means your marketing person needs to create content, have it planned out, and not be behind the salesperson, be ahead of them. Have the CRM in place, have the automation for the follow up. All of that needs to be built before the first salesperson comes on so that they are going to be as successful as possible and they're not just going to churn, 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 churn.
Right.
Yeah.
So you're when you're talking to these companies, and right now I have one that I've been talking to, and they were told they're making too much money to be invested, because they wanted them to go and grow so much faster and
Mm.
actually lose money rather than grow sustainably over time to get the big money from a couple of the name brand houses that would be willing to invest in them. Both of them just said, look, we want you to, you got to get closer to zero. This whole profit thing, we're not really concerned about. We'll get there after the fact, but go out, acquire, grow, change, whatever it is, but just keep spending faster. Have you seen that? Why would they want that?
I mean, I've seen that, and I know exactly who you're talking about. They might start with the letter A or S. And I think that at the end of the day, use your brain and use logic. I understand what they're saying, but that's not how it's being done these days. And the odds of that being successful uh, relies on them giving you the money. I would say, I want a contract that says if I do this, that I have your money. And if you're not willing to do that, why would I do this?
Right.
I think that's really using logic is why would you burn through all of your capital and then you don't have their money and then you're failing or you're having to go out and get a lower valuation to go through and because in the day you're not going to be open tomorrow without that money. Um, I think that at the end of the day, having that money in hand, capital is definitely a cheat code. Any
Hmm.
successful company had access to capital. Very, 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 very rare is the actual product is what sold itself. Much of the time, even if you have a great product, like I think Slack's a great example. You know, that company came out of the blue and just shot right up, and now it's everywhere. They still had capital to go through and to blitz advertising to that blitz scaling at some point.
Hmm.
It wasn't just the product.
No, it just seems doesn't make any sense to me if you have something that's scalable and profitable. That doesn't make a whole lot more sense. Just like you said, you create a great product, you make money, and at the end of the day, it's sustainable forever.
That's what they were going through and telling everybody, maybe a decade ago.
Yeah,
And in recent years, it's all about profitability, actually.
good.
I want you to go out. I haven't heard from any VCs recently to go through and to do that. Everybody is looking for capital efficiency,
Hmm.
meaning that you are moving towards profitability and have an eye on it. And I think that's very important. And now, if you can hit that profitability, great. Once you've hit the profitability, okay, let's go through and let's throw some fuel on the fire.
Right.
Then definitely, okay, great. You were the only salesperson and you did this success. And then you hired one more salesperson and they were successful. that is something that's repeatable now. Let's go through and let's throw some fuel on that fire and let's get you 100 salespeople. Let's go through and your product, you built it where everybody's wearing 1,000 hats. Let's get those into divisions so that they can all move a lot faster. So you get more features, so you can get feature enhancements and improvements, and you can also get the operations in there and get out of the garage. You can't be in the garage for forever. And I think that's just, at the end of the day, I think that it still relies on the investors. The investors pulled back so much over the last few years, which is understandable. They got PTSD from what happened in 2021, which was overvaluations, putting too much money in and not watching what was happening, and everybody hired, and that's why we're seeing layoffs, is that money was so cheap. So we have layoffs, and so we're now getting back to capital efficiency. I have five of you where I can have 3 people doing it, and AI is a major factor. Honestly, over the last, I'd say 2 to 3 years, it was where it really became viable. The every day, it was definitely being leveraged by companies like ours prior to that, but it was not the way it is today. We're
Right.
seeing so much innovation, so much faster right now. It's really crazy.
Just AI in itself has just continued to grow, and it's a piece that has to be part of any app going forward. I mean, it's going to be a piece of our lives, just like the microwave is. We're going to take it for granted.
It does, but I think it's also similar to what happened with crypto and blockchain. It was the hot thing. I remember when we first started RealKey, that was everybody's question. Well, do you have blockchain in there? Why? I don't need blockchain in this product. That is not a necessity. We have crypto. Again, why? That's not what we're doing. Okay, well, we don't invest in this as crypto or blockchain. And I just kept thinking to myself, like, you guys are crazy. And then, of course, they were crazy. Again, use logic.
Right.
Play through it. Now, if they're saying, do you use AI and your product doesn't need it, or maybe you leverage it, it's how do you leverage it if your everything is about basically you just repackaged a chatbot that's not innovative. You
Right.
don't you don't own everything. You may have done something small and innovative, but is that also something that is going to grow into? In these days, you can't just be a $1 billion company. You got to be a $10 billion company and have that potential. And at that point, again, does it look like amateur hour? You may still have that, but if it looks like amateur hour, they're still going to run for the hills.
hmm So you've talked through this journey. You mentioned right before Real Tech. You want to share what's going on with Real Tech and then where you're going next, yourself personally? So we'll
With
start with
RealKey, you
Real
mean?
Tech, or
Real.
RealKey. I'm sorry, RealKey.
No, I was just making sure. I like to. Are we talking about prop tech, but you're calling it real
Oh,
tech? No worries, no worries. I mean, with RealKey, shit, we brought. Excuse me, I know we're recording. We built just such an amazing product. It's well ahead of its time. There's literally nobody doing what we're doing. There is no incumbent that has built. I think that what's the most innovative thing that we've done is the deal room. So what we built was essentially a smart deal room. Think of it like Slack meets Google Drive with intelligence. And so essentially, what we're able to do is have everybody involved in buying a house and getting a mortgage in one room where all the documents are essentially stored and they can access them and then they can chat and communicate, not chat bots. It's something we can implement at a later time. But then on upload of any documents, which the system intelligently tells them what's needed based off the loan application, the guidelines from the lender, which loan program they chose, tells everybody involved what's needed, not just the borrower, but insurance, title escrow, employer, inspector, appraiser, insurance company, real estate agent. There's about 15, 20 parties involved. And that way they get the right items the first time. But on upload, it's going to analyze and say, did you miss something? Is it outdated? Is the wrong mortgagee clause, the wrong loan number? Do we need supporting documentation? Do we need a letter of explanation? All these things that slow down the process and that you usually have to wait for a human to look at, the system does in less than 30 seconds. And that's something that's, I'll be honest, is not innovative. There are companies that have been out there even when we started doing the Doc AI, which is what we call that. And we started that with Google's AI ML cohort, one of 12 companies selected for that. So something we scratch that itch for all the investors that are like, oh, we need AI in there. We have that in spades. But at the end of the day, the AI piece is not the newest and most innovative part. But we did it better than anybody else did. The closest competitor that raised $122 million at a $500 million valuation. We had a product that did in 30 seconds what theirs took 17 minutes to 2 hours to do.
Wow.
They always expected you to dump your documents in, come back as a processor or underwriter. And they definitely didn't deal with any third parties. They only dealt with lenders and banks and credit unions. Those are still our paying users, and they expected you to dump it in and come back. That's not how a processor underwriter works. So again, this gets back to that. Having the industry expertise and know how to understand what are workflows and does this work seamlessly with that workflow, or is it interrupting it? You can't go through and ask as you mentioned, dinosaur industry to have people come in that are not technologists and then say, hey, change how you're doing things. You got to say, hey, keep doing how you're doing things, and I'm going to make it that much better and make your life easier and make you that much more efficient, where you're just like, damn, was this my whole life?
So yeah, when I was at WAMU, we didn't have a CRM, and so I went out and I bought Act and hired a person to put it on my computer and everybody's like, wow, that's cool. So it ended up being rolled out at that point beyond that. But that's how, how slow people were in the industry, they're afraid of change. And so if they go into this doc room and it quickly analyzes it, I am at B of A, I'm at Wells, and are you shopping through this the doc room, or is that separate? How does that look? If I'm a consumer, why
If
would
you
I?
want a consumer journey, basically, it's just like you don't see this until you're done doing your loan application, whether it's over the phone or online. Lenders ran your credit. They decide which loan program, or if they're a broker, which we work with too, which bank and which loan program. Like,
Okay.
okay, we have now a list of needs. So what they're doing is they're exporting that from what they call their loan origination system, their core platform, to RealKey. RealKey is then the intelligence that says, okay, thanks for the loan application. I know what loan program, and I know who you are, which bank you chose as a broker. Here's the comprehensive list of what's needed. Tell me who's the insurance company. Tell me who's the landlord. Who is the
Mm-hmm.
employer? Who is the real estate agent? Which title escrow company are you using? Let's invite them in. Now they're invited in. They can upload to this. Not they email it to you. You can upload it back in the system. There's not going to be any intelligence there. I mean, in the future, we might be able to integrate with your email too and all this, but we're getting way ahead. Let's just focus on what we can do. Let's not try to boil the ocean. Let's not lose our focus. Our focus is you upload to the system. It gives you immediate feedback.
Mm-hmm.
Like, hey, I can't see your photo. It's not very legible. I noticed that you uploaded this bank statement. Just FYI, you're going to need another one soon. Okay, but I also looked at, your pay stubs don't match your bank statement. Or you used a P.O. box here. I need a letter of explanation for that. Or you are living here, but your employment's here and your house is here. That doesn't make sense as your primary residence. So we are, again, going to need a letter of explanation. So you can see how something may trigger something. Now, other times, this is where we are differentiated. Other products out there, they'll read that W-2 and say, here's the data, lender, build some intelligence around it. We gave you the system that reads it and gives you the data. Oh, we come out of the box, and when you upload that W-2, if it's good, we don't even tell you anything. We just give you a thumbs up. That looks good. It meets all the requirements for the document and all the conditions, and we didn't trigger anything, and everything that was uploaded after did not go back and look at that and trigger anything new.
Okay. And so if there's a underwriter or if it's a loan that doesn't trigger any, they don't walk into a bank, they go to the broker. Does the underwriter go through, and is all communication through the deal room?
I mean, ideally, that's how we suggest doing it. What we found is that email and phone is just so inefficient. There's a reason we all use Slack today. We can't have, for Slack, you would have to make a new Slack for each and every deal because you're inviting in a bunch of different parts, basically a different company or a different room
Mm-hmm.
that does that right now. And what I was looking for was something where in the future, I find this to be almost like a marketplace too. If I need to go through and I want to find a broker, eventually we can go through and integrate with these marketplaces like Bankrate and Lending Tree and you name it, Zillow, etc. And the consumer comes in, they're looking for a loan, we can start the process there. We call them untethered consumers, meaning they're not with anybody. We can then have that pricing engine, that marketplace, match them, and then that they're matched, start uploading documents. We could do it eventually we also see people not filling out loan applications. That was what really started the whole innovation was Alan Tifford on our team, who was the TurboTax design lead at Intuit's principal design strategist. Obviously, brilliant guy. He came in and he's like, well, why are we even focusing on loan applications? That was our first iteration of product. We went through 2 pivots. That product sold really well, but was the wrong product. And it was hard to come to that reality, but we went through a whole process of reviewing what we could build. We call it open mode, and that's what he calls it. Came from if you look up John Cleese, you can find open mode on YouTube. Watch it. Basically, it means open mind, solve any possible problem, consider all problems, and then look at, okay, the problems that you can solve. What's the value to who you're selling it to?
Mm-hmm.
Pay for it. Is there any barriers to entry? Again, you're just doing analysis on all of these, and we came down to it. I said, well, documents is the end all be all. You can tell me your name's Graham, but I need a ID. You can tell me where you work, but I need a pay stub. I need a tax return. It makes it. The documents are the point of truth, and those can fill out the loan application. And the intelligence can trigger new needs based off of it.
That's great. Wow. Talk about game changing and saving time. So now you said you paused that. What's that look like? What's a pause look like?
Yeah, so I mean, this is obviously for those listening, depending on the timing, we may or may not have fully announced this publicly.
Okay.
I mean, we announced it obviously internally into our users, but basically we came to the conclusion that right now just investors not hot in mortgage and real estate. It's the end of the day, if they look at right now the industry and you tell somebody you're in mortgage and real estate, people say, oh, the sentiment is, how are you doing? It's not looking at, oh, okay, let's actually just look at your numbers. Wow, you went through Google's AML core. You have all these great people working for you, and you built an innovative product, and you grew in a down market, and you're profitable, checking all the boxes except for the factor mortgage and real estate. And so what we're seeing is that consistently the valuations for us having 50x the revenue of another company that has a Stanford grad with no experience, no nothing, and just happens to have some AI in what they're doing and little or no traction, they were getting higher valuations. And we just said, this is stupid. Gave the middle finger to investors and said, we'll take a step back. We built a product that's ahead of its time, so we have time.
Mm-hmm.
I don't see anybody building what we're building. It'll take them at least 2 or 3 years. It does need to be a new incumbent. It can't be one of the LOS's, point of sales, because in the day you're solving for your product, but you're not solving for the industry. So no one's going to solve for the industry but us to build that deal room. They might build the doc AIs. They might build the processing underwriting AI. So far, we're ahead of everybody on all of that. But the deal room, that's why I said that's the innovative part. That has a massive barrier to entry. And with that, we'll come back maybe a year, 2 years, 3 years, whenever the markets return, and investors are going to be paying a much higher premium at that time when could have gotten a good valuation now. And I think that's where, if I'm talking to investors out there, end of the day, stop following, stop herd mentality. There's so many follow-on investors. There's very few leads. And I think that that's where you got to take a step back and look at yourself in the mirror and say, what am I doing? I'm following everybody and I'm paying higher valuations and I'm swimming up a wave. And those, if you're investing in AI right now, you're already too late.
Right.
You need to get ahead of yourself. We're a cyclical industry. You're going to go through and set up a company to be at the top of the wave, to ride it and be ahead of everybody when the next cycle comes through. And guess what? At that point, they're also ready for their next investment, their next round. And that round is going to be a massive multiple to what you paid, because you have not only extra traction, but you're also at the height of the hype.
Right. So you pause. Are you ceasing operations then? I mean, is that and just holding on to?
We told our users, it was actually the beginning of April. We said, look, we're not going to charge you this month, and please be out by May 31st. We started rolling off staff, and that was part of the reason not to charge them, is that there is upkeep involved, and we let them know, look, obviously security is not going down, but at the end of the day, a lot of the intelligence may start degrading over time. You need to keep up with latest guidelines and everything else, right, and new loan programs. And that was where we just looked at each other and said, look, we can't be 100% on this, so let's go through and not charge people.
Well,
And so that's basically it. We're protecting the capital. We're protecting also, the equity. And so, look, we'll come back to it, and maybe there is an asset sale. One
hmm
thing we're not doing, we this is very different from most companies that would try to get the highest possible exit. For us, we did look at our users, and we always promised them we would never sell their data. And so that's why we would do an asset sale, is that the data is not for sale, the pipeline's not for sale. We can always rebuild that though, or the next company. I think that again, the product's differentiating with the right amount of resources and capital, it'll grow very, very fast.
so it's a defining moment for you. You're taking and moving from RealKey to what? What's next
I wouldn't
for
say,
Christopher?
this is not the first time I've had a company and then moved on to another. The question is, am I building something new? Is it something for myself? Is it something for somebody else? I'm very fortunate that I'm not a one-trick pony. And I think that it's unique. Again, like I said, definitely everyone needs sales and marketing, but also people need a product that really understands their industry. So I'd say anything in fintech, prop tech, insurtech, definitely have that in spades, B2B SaaS. But in the meantime, until I find that, full-time operational role, started going through and helping out, mentoring, consulting, just kind of paying it forward with a few businesses here and there, a few of the incubators, accelerators, and VCs, helping on their diligence side to make sure that, the capital is going to the right places in many cases. I think that our industry is very misunderstood. And when you look at a VC, they either look at their experience buying a house and then they start talking to their mortgage person who, again, salesperson, not tech oriented, usually not even the one holding the credit card. And even if they do, they don't fully understand what happens after they throw things over the fence. And so that's where I'm kind of coming in and saying, all right, well, let me help you out. One of the quickest, easiest ones I could tell you is company has an NMLS number. That's a mortgage company in tech clothing. They may be leveraging tech, but they need to focus on hiring, recruitment, sales, marketing, compliance. Being a tech company is a full focus. Either you do tech or you don't do tech. And you leverage tech, that's fine. Might be best in class. You might have found a niche, great. But I think at the end of the day, that's something that investors need to be aware of. Our industry, if they have an MLS number, same thing in real estate. Is it a real estate company which has been done and done to death, or is it something truly innovative and new?
Yeah, no, I think that's um, you have the dinosaurs, the old companies. Then you have these brokers that are somewhere in the middle, and then there's really EXP and Place are innovators right now in the industry, and then others are just redoing the old and not changing a whole lot and just kind of trying to claw on and hold on to what they had and or have. And the landscape's changing, and people need to accept that. So with are you staying in the mortgage world? You said you're not a one-trick pony. Are you going to move on and just anything fintech? You said prop tech. Is that kind of
I
the thought?
mean, that's where I mean, if you're trying to go through it, I mean, it's kind of like if you go through a new head of actors. You have somebody who consistently plays a villain and they never do a comedy or romance or, action adventure where they're not the villain, where they're the hero. They kind of get pigeonholed in that. I've been in the mortgage industry for a very long time and in fintech and prop tech and insurtech for so long that I'd say that's where, if you're just looking at my resume, that's where I hold the most clout, and that's where you're going to think I go. But at the end of the day, I think that I've already talked to a lot of our investors, and they have other companies they're looking to place me at, or they've seen with the incubators and accelerators. The expertise and experience I have applies to everything.
All right.
I'm advising for everything from actually film studios right now to flying cars to food products. And end of the day, it's still all about, for the earlier stage, their pitch decks, their deal rooms, their outreach to product market fit, even for the largest companies in the world don't have product market fit. And I mean, with so much digital noise that we have, they need somebody to come in that's innovative. And sometimes it's also just fixing culture.
Right.
Uh, you come into some of these companies, no company's perfect. Everybody needs something to be fixed. And it's, do you have somebody with that mentality that's not going to be a bull in a china shop? So that's where having somebody who's a cool, calm head, but can go through and have a logic-based approach. I think that's unique.
Yeah, no, I agree. And I think that, another term for that might be entrepreneur in residence for you. You can come in and bring in innovation and creativity to what may be lacking. People, businesses, we wear all the hats, and then we get to the point where we're not having all the hats on, and then we're comfortable, and sometimes we don't see outside of that, or what might be laying ahead that we need to jump over or sidestep or move around. And so having somebody like yourself on there doing that is, I think, critical if you don't have somebody internal. And
Yeah.
so I was just thinking about it. Some of the people listening don't have any idea prop tech, insure tech, and you want to explain that to them?
I mean,
Yeah.
fintech is financial technologies that can encompass everything. Obviously, mortgage kind of falls in that because it's lending, it's loans.
Yep.
So loans, credit cards, payments, a wealth management, investments, pretty much anything that your money touches is financial technology. Prop tech is really anything related to real estate. That could be anything from real estate agents, it could be CRMs, it could be compliance, regulation, it could be advertising, marketing, or it could also be property management. It can be construction, which falls under pawn tech, but still in the
Hmm.
prop tech category. And then insurtech kind of explains itself. It's insurance
Right.
related.
Yeah. Yep.
Yeah.
No, that's good. That was just to make sure. And then, so you're obviously a driven, creative entrepreneur. You're full of grit. When there's adversity, what do you fall back on? How do you overcome it?
I think that at the end of the day, it's kind of a mentality. You get hit so many times, and especially if you've been through enough of it. I definitely had my successes, but I got my scars too. But as I say, I've got more trophies than I do scars. But the scars do help out, and when you have the scars, you get tougher for it. At the end of the day, it goes back to, I guess, maybe the sales background is you get used to rejection.
Hmm.
And it's the same thing. Something happens. It's how do you react to it? Do you overreact? Are you cool, calm-headed? Our culture within our company at RealKey is always, we had a roundtable approach, and everybody within the company was all logic-based. We all treated the company like we're all sharing the same food, and when the food's gone, none of us eat. At the same time, if we're going to feed somebody else, and we know we're giving up some of our food to do it, we saw it as growing rather than taking away. So I think at the end of the day, it's again getting back to logic-based approach, full calm-headed. Elon Musk, Trump. I'm not. They just happen to be in politics, but I would relate to them in this context. I think that old school way of yelling and screaming to demand respect or using just capital and money to do it. That's not how companies thrive and succeed these days. They thrive and succeed because you get people who are intelligent and who work well together and who have senses of humor. That's actually my cheat code. If you want to find a way to know whether somebody's going to be easy to work with, take them out at some point in the right context, tell them a joke and see how they react. If they're not laughing, that might be somebody hard to work with.
Right.
I
Yeah.
definitely don't want to work with somebody who can't laugh and joke and you know have a sense of humor, not just in general, but even about themselves. Be humble.
Right. No, I love that humble and laughter. I think that especially right now in today's landscape, we're afraid of even telling a joke, I think. And oh, it might offend somebody and so I think that, yeah, if you can take them and put them in, go
I'm
to,
not gonna say I'm here, but I definitely got plenty of non-PC dad jokes.
uh,
You make sure to say those in the right context.
exactly. Yeah.
But at the same time, I think that there's a place for it. At the end of the day, we all want to laugh.
Right.
We
Yeah.
all want to laugh. We all want to have fun, and we all want to enjoy life. And people, I do understand sensitivities, and I'm sensitive to those.
Sure.
That's not lost on me is empathy. I think empathy is important. Just being a better individual in general. I think that that's really what everybody should strive to be. Is I've never burnt a bridge in my life. I can say that confidently. I'm on recording here. Somebody who I've burnt a bridge with. Let's have a conversation because I doubt it.
Yeah.
It'd be one-sided, but let's see it. But yeah, just
Well,
being
humor doesn't have to be mean. We never said mean, right? It's just being empathetic, humble, and good human. So,
yeah.
um, so if you had one piece of advice to give to the entrepreneur out there right now, what would it be?
Surround yourself with people who know more than you. Don't try to think that you know everything. At the end of the day, if I looked back at anything, and as they say, with age comes wisdom. I'm not the oldest person, but I've lived a long life professionally, compared to most, and that's true entrepreneurism. I would definitely kick the younger me in the ass and say, "You cocky little shit, you don't know a damn thing," and start listening to other people. And definitely, the times I regretted, I hired cheap.
Mm,
Cheap gets you cheap.
mm,
Sometimes you get a deal, yes, but you're still not getting the best that you can, and that's where again that capital comes into play. You have the proper resources and capital, you hire the right people, and that's what we did with RealKey. I did that on day one. I made sure to get highly pedigreed individuals to surround me, and that's why we built something so fast that was so innovative and was the right product. We pivoted and pivoted and pivoted to get to that right product.
right. Oh, that's great. So, what did I not ask? What is it that Christopher wants to share?
Oh goodness! There's all kinds of things that we could go into. I don't want to go too much into personal life. That we save that for beers and drinks, which is maybe that's it. That's a side hobby of mine. Is I'm a rare beer collector. At the end of the day,
Oh,
before I tore my ACL last year, I was a fourth degree master in Taekwondo, and uh, definitely passion is around beer and martial arts and movies. So. Yeah, I guess maybe that would be about it. Is sharing more about me on that side, and that I've got a now 3-year-old, she just turned 3, and well, I think that adds a little spice and teaches you about being a better person. At the end of the day, it gives you a different perspective, and it also helps you understand where people came from. We
hmm,
were all raised a certain way. That angry person that loses their cool out in the street or in their cars on the road, their parents didn't teach them to take a deep breath, learn to control their emotions. And it's just interesting because you look at the adults the same way, like, did your parents not teach you how to breathe, relax, calm down, and uh, and did your parents teach you to yell and scream to get you what you want, and never correct that, whining, crying, side of things, or did they teach you that's not okay?
right.
Yeah, so
Yeah.
that's just an intriguing piece to me, and it definitely relates back to work and business and everything.
Yeah, I think kids can expose you to a lot, can't they? They'll teach
They,
you
they
probably
can.
more than the other scars.
Not everybody sees it or hears it too, because obviously there's parents out there, and that parent is still that same way. It's like the kid didn't get them to change anything, or maybe they are teaching the kid to be better.
Right.
But it's old. A old dog can't learn new tricks. I don't know that portion of things, but I do know that it's definitely helped me to better understand everybody else and where they come from,
Mm,
for sure, and how to approach things.
good. So, how do people connect with you? How do they find you? And if they want to learn more and talk to you?
Oh, I'm easy to get a hold of. I mean, you literally put in my name and you can find a way to get a hold of me. I'm not hiding, but I always say LinkedIn is always great. I love people to jump on there. Always appreciate the endorsements, everything. Happy to return the favor, but I'm always looking on there. How can we help each other? Uh,
Hmm.
it's not just, hey, how can I help you? It's great. It's both ways. So,
Right. No, I agree. That's how we connected, is how we can help each other. So, well, Chris, it was awesome. Thanks for Christopher. It
thank
was
you.
awesome. And
Appreciate it.
uh, I will include your contact information in the show notes as well, so people can find you if they just are too lazy to just go look into Google. They can actually just click on the link here. So, but it
Perfect.
was great. It was a lot of fun, and I look forward to another call. Maybe next time we can have a virtual beer and tell some dad jokes.
Unrecorded, unrecorded. All right. All in good taste, though, in good context. Context and
Context is key.